All right, let's talk about Chuck Hughes. You know, it's often said this is a man who needs no introduction. Well, this is very true in this case. You know, I started in this business as a stockbroker about 27 years ago now, and Chuck Hughes is a legend in this industry. He's one of the good guys. He's a vetted. You know, we vetted him, of course, but was vetted a long time before he came to partner with FFR here. Some of the highlights of his trading career, again, 35-year trading career, developed a systematic business-like approach to trading stocks and options, and you'll see that in the strategies that he's got for you today. You've probably seen or heard the stories of his trading competitions that he's competed in. Those are real-time annual returns that are audited as high as 333% returns. Chuck, you've written a lot of books. You've been all over the internet with your strategies and your teaching. And I'm just going to bring Chuck in here. Chuck, what do you want folks to know about your background, or what is important for you to let people know?
Hey, John, it's great to be here today. Well, folks, I've been trading for 38 years, actually 39 years, because I started in November of 1984, and I was an airline pilot at the time. I was on a layover in the Flamingo Hotel in Las Vegas, and I placed my first option trades on that layover in the hotel. Wow. And of course, back then we didn't have cell phones, so I had to use the hotel phone to call a broker in Chicago, and I took my first option trades in 1984. So that started a long career of futures and options trading, and it was always my hobby as an airline pilot, and I traded on the side and did pretty well. And then when I was an airline pilot, I got vertigo, and I was grounded by the FAA. So that's all I ever wanted to do my whole life was fly jets, and I got to live the dream. But as life happens, I got vertigo, and I got grounded from my job. So I had to rely on my trading at that point. I had kids and a mortgage, and I had to rely on my trading to make a living. So I've been trading full-time ever since. So I have a lot of experience, and I have 6 kids, and 4 of the 6 kids and my son-in-law are active options traders, and they work full-time for me. So my kids have kind of taken over the reins here. They've been picking the trades for my advisory services. So we have a long history of family involvement. My daughter, who went to Carmel High School, she was picking option spreads when she was in high school. So my kids are totally involved, and they pick the trades for my trading services, and it's a family affair right now. So we've been maintaining these advisory services for 24 years, and we've kept a record of all our trade signals for the advisories, and we now have 24 years in a row of profitable trades, and that's a lot different compared to, you see a lot of back-tested systems on the internet. So 24 years of live signals, I think that's significant, incredible. So you're learning from somebody that has a lot of experience and has a record to back up our profit claims. Over the last 8 years, I've had $3 million in actual profits trading these strategies. So long history of success with the trend following system that I started in 1984.
Fantastic. I mean, like I said, you're a man that needs no introduction in the trading world. And like I said, you're one of the good guys. You've been vetted. There's so much snake oil out there, as you know. It's just so refreshing, and it's really a privilege and honor for myself. I've been trading for over 25 years to be able to interact with you here. So I really appreciate you coming on and spending some time with our people here at FFR. But let's get into your premium services. First, we're going to look at the Platinum Reserve Options Trading Service. Now, this is, we'll take a look at the performance here in a second, but this is a service that's actually made up of several different strategies. So you're basically diversifying people among a bunch of different strategies. I think there's 5, and we'll look at them here. What I really want to point out is, the beauty with your performance is you do have a high win rate. And I found it's very important when people are trying to follow trades, because as you know, people run into a few losing trades, they tend to kind of lose faith.
Yes.
You're hitting almost 80% win. We're hitting 77% winners with the Pro Options Trading Service. So if you think about it, if you're hitting close to 8 out of 10 trades, it's pretty easy to take when you're trying to follow those signals. So it's something I wanted to point out that's very important. Anything else you wanted to share as far as the track record goes here on the Pro Option Service?
One thing I'd like to point out is, 2 things actually. There's a statistic there. It says average percent return winners and losers, 152%. So that's the average return for the closed out trades for the Pro Trading Service since September 1st of 2020. So that's a really high number, and it almost sounds fake, but that we're able to achieve that high percent return due to our money management techniques. And also, we also have an option spread portfolio in the Pro Trading Service. And with option spreads, you can profit if the stock is up, down, or flat. So you're way ahead of the game when you're trading these option spreads, because you can profit even if the stock goes down. And another technique we do is if we have a profit on a call option purchase, then at a later date, we'll sell to open a call option to create a spread, and that allows us to achieve those high percent returns. So 152% average return for all the closed trades, winners and losers. And there's one other, at the bottom right there, you can see the profit factor is 3.85. So our goal is to achieve a 3-to-1 or better profit factor. And the profit factor is simply the gross profits divided by the gross losses. The higher that number, the better. But it's a good overall measure of the risk you're taking. So if you can achieve $3 of profit for every $1 of loss, you're doing good. And it's the type of program that you can stick with. If you had a 1.5, let's say, or 1.2 profit factor, you're going to have a lot of losing trades. You're going to lose a lot of money in the process. And we know from experience that people tend to drop out of programs like that because they're just losing too much money and they lose faith in the system. So our goal is to achieve a 3.0 profit factor or higher. That way we know that we're controlling risk with our risk management guidelines.
Fantastic. So like I said, that's the key that I found is if if there's not a high percentage of winners, people tend to drop off, right? Because nobody likes to lose. But the beauty of your systems is you don't lose often, right? And the losses are controlled. So let's get into how that service works. So there are trade signals that are sent through email or text that your students receive, and it explains all the details of each trade and how to execute that trade on their own. Is that correct?
Yes, that's correct. And we have specific instructions in the email alerting members to for which strike price and expiration month to purchase an option.
And this
we
is
also send out a signal when we exit a trade. Of course, we'll send out a signal to exit the trade, and we also will roll over profitable option positions if the stock is still on a power trend buy signal. We'll roll over the profits on that trade into the new option, and that allows us to reduce the cost basis and risk of the new option and compound our returns.
And these systems that you've created work in not just bullish markets, but bearish markets and then sideways markets. There's a lot of people don't take into account the fact that markets move sideways a lot, and that's when you can be really chopped up.
Yes, probably 70% of the time the market's not really trending in one direction or another. So that's the beauty of the option spread strategy, is that from the minute you establish that spread trade, you have built-in profit opportunities that allow you to profit on the spread, whether the stock goes up, stays flat, or even goes down as much as 10%. So that gives us a big leg up over directional option trades, which can get stopped out pretty easily in these markets with the volatility. You can get stopped out of directional trades pretty quickly, but these spread trades, they have built-in downside protection from the minute you take the trade, so that gives you a huge advantage over directional trades.
We're going to talk about, they're going to have access to the members website. We're going to take a look at that, and you're actually going to take us through some of the important aspects of the members website. But it'll have a trade history in there, all the open and closed trades, obviously the contact information for your team, all the resources that they're going to have access to. So we'll take a look at that here in just a moment. But here's kind of a breakdown of the strategies. All right, so there's 5 different strategies. Each one is a little different. So the first strategy is the option spread strategy. Now, that is spreads. Now, those debit spreads, credit spreads, or both, or
yes,
how does that work out?
Yes, those are in-the-money debit spreads, and the spreads allow you to trade the high-price stocks with low-cost options. In other words, you can, most of our spread trades cost between $400 and $1,100, depending on how wide the spread is. So that allows you to trade, the high-priced stocks for about $750, $800, $1,000. You can establish a spread on these high-priced stocks. Whereas if you were going to purchase a call option, in-the-money call option on those, that could be $5,000, $10,000 to purchase an option. So the option spreads allow us to trade higher-priced stocks, options on higher-priced stocks, but more importantly, they have built-in profit potential from when you establish the trade and give members the best shot at success. And that's been our best performing strategy over the last 20 plus years.
Wow. All right, so you guys definitely want to have that in your portfolio. Now, the second strategy says option portfolio. How is that different from the option spread strategy?
Yeah, the option portfolio is a directional trade. So we either buy a call option or we buy a put option. And we use what we call the 1% rule to select the option strike price. So once you decide on the stock that you want to trade an option on, there could be thousands of strike prices to choose from. So which strike do you pick is always the big question when you're trading options. So what we have is a simple rule. It's called the 1% rule, and it's a mechanical, mathematical rule. And when we use the 1% rule, if we purchase a call option, the stock only has to go up 1% and the option starts profiting. And if we purchase a put option, the stock only has to go down 1% and we start profiting. So this, using that 1% rule, gives us a higher percentage of winning trades, and gives our members that discipline that they need to stay in this game, and you have a less chance of getting stopped out of a directional trade when you use the 1% rule.
Okay, excellent. Great explanation. I think that will help folks as they, kind of go through each of these and how that's going to benefit them. And guys, you got to think about, how is this going to benefit you, or would this help benefit you if you had, Chuck providing these trade setups for you in these different stocks and options. Now, the third strategy here is a covered call strategy. That's, pretty self-explanatory. I think most people here probably understand the covered call, just simply buying a stock and selling a call against that position. And that's probably generating, is that weekly and monthly, or how far do you go?
Yeah, those are usually monthly options, 1 month out or 6 weeks out on average. And then if the position is profitable, then we'll roll over to the next month. So covered call strategy is it's a very conservative strategy. It's a lot lower risk than taking directional trades, and you can hold these covered calls through market downturns without getting hurt too bad, and so it's a good balance between risk and reward for the average trader. So we put that in to diversify our portfolios for the advisory service.
So these two, the fourth and the fifth strategy here, are basically non-option strategies. You're trading ETFs and stocks.
Yes, yeah. That's to diversify our portfolios in the pro trading service, and we use our power trend system to select ETFs and stocks. And depending on how much money you want to invest in each stock or ETF, if you want to invest, say, $500, you could probably purchase all the stocks, all the ETFs in about a $3,000, $4,000 account. So you have more flexibility when you're trading stocks and ETFs on the number of shares that you purchase.
All right, well, that's great to know. And because there's, 5 different strategies here, people can choose to trade one or all if they, have the capital to do so. Ideally, we're trading all of them to give you that diversification. So let's take a look now into the members area of the website, so you can kind of take them around and show them. Here is the home page. So when you guys log in, when you become members, you'll see this home page here. And I think, Chuck, you probably want to look at the trade results first.
Yes, we could look at that first. And the table at the top lists the open trade profit results for each of the 5 strategies. We have the prime trade select, that's stock purchases, the option spread portfolio, the option purchase portfolio, the power trend portfolio, which is ETFs, and the covered call portfolio. So we just recently initiated covered calls. I think we started maybe a month ago, 3 weeks ago on the covered calls. So we're slowly establishing covered calls in that portfolio. So, and you'll see there it's updated as of December 20th, 2023. So each day, all the prices on the stocks and the options are updated after the market close, and that in turn updates the profit and the percent return for those various portfolios. So that's the top table, and then below it you see the closed trade profit results, and if you scroll down you can see this record goes to, this actually goes to July of 2020. So whenever we close out a position, it goes into this closed trade results so that we account for all our trades that were issued to members. So so we have an open trade portfolio and a closed trade portfolio that show all the trades that were issued to members.
And you can see the option spread portfolio, like you said, was doing very well. It's really crushing it. This is just in the open trades right now,
Yes.
in profit over $13,000. It's phenomenal. So guys, think, what would that do for your IRA? I mean, what would that do to help you reach your financial goals when you see these kind of numbers? All right, so there's the trade results, both opened and closed. Where else do we want to look, Chuck?
Yeah, we can look under members resources there, and we'll just do a quick we can look at the email alerts archive there, and we keep an archive of all the emails that are sent to members. So this email is was sent out Monday. It's just a market recap for the previous week, and it'll illustrate some positions that we took and the strategy behind these the trades in the advisory service. And if you scroll down a little bit, you can see a record of all the emails that were sent to members. So if you click December 14th there, you can see that this email was sent on December 14th to members, and this was a rollover of our Meta call option purchase, and we closed out the December 25th option, and we rolled into the December 22nd option. So there are specific instructions in each email so that members know exactly what to do. In this particular trade, we're rolling over the Meta December 20, let's see here, December 15th option into the December 22nd option. So this was a 7-day trade. This is a weekly option. Mm-hmm. So the instructions were to sell to close the Meta December 15th, 385 strike call, and buy to open the December 22nd, 310 strike call. So we give specific instructions on how to roll over that trade. Now, if you're a new member and you don't have that existing trade to roll over, if you look at the bottom there, we give instructions for new members to buy to open the Meta December 22nd, 310 strike call. So that allows newer members to jump in on our current trades, and they can start participating in all of the trades.
All right, great. And that's so as a new subscriber, you know, you won't miss any great trades.
Right.
All right, so that's the email alerts archive. What else do we have
Okay.
here?
And then we could look at the getting started videos. Okay, and these are very basic videos. If you're new to options trading, you can take a look at these videos. These are short videos. You know, how to obtain an option quote, how to enter an option order online, how to fill out an application for some of the major brokerage houses on opening an options account, using the Keltner channels to help time your entry. So these are very basic videos. So if you're new to options trading or you don't have a lot of experience, then I recommend you look at some of these videos, and they're very, very basic on how to trade options.
That's fantastic, especially for, like you said, the new folks that are just getting started. I mean, providing information on, you know, how to get their account open. This is valuable stuff because a lot of people struggle just, you know, with the beginning steps. So to have that all mapped out for them is fantastic. All right,
Yes.
then you've
And
got
then
some
we
of the
can look,
strategy videos.
yeah, strategy videos, and these are in-depth videos that go through step by step the various strategies. There's one there. Video number 5 is legging into option spreads. Video number 6 is trading with built-in profit potential, which is the option spread strategy. Video number 8 is the MACD and OBV indicator. So we go into great detail for all our strategies in these strategy videos.
Well, these are fantastic. So really, it's all really just mapped out for them from beginning through covering each of the strategies and how to, you know, implement those strategies in their trading. It's very, very comprehensive. So I'm very, very impressed because, you know, we deal with a lot of traders, and the material that you provide your members is pretty exhaustive.
Yes,
So
yeah, it took us many years to develop that, but it's, you know, it allows our members to get a full understanding, and they can spend as much or as little time as they want learning these strategies. Of course, you can just follow the trade signals if you want, and but if you want a more in-depth look on the process behind selecting these trades, then you can watch these videos at your leisure.
all right, perfect. And anything else that you want them to see here?
One last thing under members resources there at the bottom, we have the strategy calculators, and this let's select, I guess, the call option purchase. And what we do before we take any option trade, whether it's an option purchase, an option spread, a covered call, we will use our calculators to calculate the profit potential for that trade. And we do this before we take the trade so that you get a really clear picture of the risk reward characteristics of the option that you selected. So this one we're looking at now is a call option purchase, and what you would do is you would enter the stock symbol, the current stock price, the option strike price, and then the option premium. So you'd enter that into the calculator, click calculate, and the calculator will calculate the profit potential for that strike price that you selected, assuming various price changes in the underlying stock at option expiration. In this example, from a 10% decrease in the stock price to a 10% increase in the stock price. So, and this will calculate the profit loss potential in dollars, and also calculate the percentage profit loss potential for the strike price that you selected. So these are really handy when you're trading options because you know the profit loss potential before you take the trade. So these calculators are available to members.
All right, great. And this, like you said, covers all the different, they have calculators for all the different option trade setups that you'll be doing with the service.
Correct.
Which is quite valuable. All right, so that's a look at the members area.
So you see the strategies there to the left a little, right there. Yep, there you go. Let's just look at the option strategy real quick. And we have two current option purchase strategies right now for Meta and for Vistra Energy. And each day, the top table lists the entry date, and the bottom table lists the current dollar profit or loss on the option purchase and the percent return. And again, each day these prices are updated so that members can see how each position is doing in terms of dollar profit loss and percent return for all open positions. Right now we have $4,900 open trade profit, average return of 321%. So each day, again, these prices are updated for all open positions, and members can see how the trade is doing. And then we'll just take a quick look, John, at the option spread portfolio.
So I just want to, because this is phenomenal, Chuck. I just want to point out to folks, this trade in Meta was open like 5 days ago, and you're already close to $4,000 in open profit here. I mean, guys, think what would that do for you? You know, what would that do for your financial life to have these kind of trades picked for you? Phenomenal. Okay, so you want to take a look at the option spreads.
Yeah, and John, just to clarify, that Meta option was rolled over. So we rolled over the profits from the previous position into this position. So that reduced the cost basis of this one. So
I got you.
That will give you a higher percent return when you roll over profits like that and reduce the cost basis of the new position. So we've been rolling that over for several months.
Oh, gotcha. Okay. All right. So let's take a look at the option spreads. This one that has been on a tremendous run, like you said.
Yeah, and this, as I mentioned before, the option spread strategy has been our best performing strategy over the last 20 plus years. And when you establish an option spread, you have less of a chance of being stopped out. We use money management rules for all our trades. You have less of a chance of being stopped out of that trade when you have built-in downside protection in an option spread trade compared to a directional trade. So we can hold these spreads usually through sharp down markets, unexpected market turns, downward, volatile markets. We can hold these option spreads longer because they have built-in profit potential. And the second table there, the table at the bottom, again, these prices are updated every day, and we list the dollar profit and percent return for each of the positions. Right now we have 10 positions, 10 open positions, and the average return is 224%. So with that kind of downside protection, the market would really have to crash before this portfolio would lose money. So highly unlikely that we would get a severe market crash, but this portfolio has that built-in downside protection and allows us to maintain the positions during volatile markets or sharp down moves in the markets, and has been our best overall strategy over the last 20 plus years.